Hey, welcome back to What the Biz. We're talking about the SaaS stealth tax, why you're funding into its margins instead of your own. We're going to explore why those winning on AI are just doing what we're all supposed to be doing. Facebook is testing out new layouts. We'll even show you those. And Google has quietly altered their terms of service and how that's impacting your ads in relation to AI. So that's all today on What the Biz.
Welcome to What the Biz, where we talk about building successful businesses, balancing life, and all the WTB in between. With your hosts,
I'm Bridget Vector.
And I'm Dan Prochko.
What's up, Bridget? How you doing?
I'm doing good. I'm in the mid-year reset. The team is taking our quiet week that we all take around the 4th of July. And we have a lot of projects going on.
Oh, yeah.
Now. So, yeah, like lots of conversions, new clients coming on.
Sweet.
New setups, lots of things happening over here.
No, that's awesome. That's awesome to hear. Yeah, I'm excited for today's conversation. We've got 4 cool topics, a lot of stuff happening right now. We are in the middle of 4 major projects, and a 5th major one is going to start soon. And I think we're hiring is what it is. I think what I'm saying is we're hiring, which is wonderful. And we'll talk more about that because that's actually impacted in today's first topic today, actually. Payroll costs and everything going up all over the place. But you brought this up to my attention. And I know that I've experienced this a bit, but QuickBooks Online has had some price increases recently, but they're doing another one again already. I feel like it just happened.
Yeah, so QuickBooks has kind of been on this kick, and they seem to pick the subscription levels that they want to target. So if they have some, especially the base ones that have kind of been lower than what they want them to be, we've seen a couple of increases happen for those, but coming soon. So if you're going to be a new user on QuickBooks starting August 1st, all of their subscriptions are going up. So if you've been thinking about even joining the platform, I would do it before August 1st, before those new fees go into place. But for current users, they're giving us until September to see kind of that new price increase happen. And I think about this with all software companies, not just QuickBooks and Intuit, which I'll talk about kind of my feelings on all of this in a second. But it's almost like this silent cartel, right? We all have these subscriptions that exist. There's things we have to have. I know we've talked about subscriptions in other episodes, but they just kind of happen. And watching the Intuit one, so there's one plan in general that just kind of stuck out in a way that not even 10 years ago, the price that you were paying, what you're going to be paying now, it's increased over 180%. And it's the same exact core software. Nothing really has changed much with Intuit. They're adding their AI, which we've talked about, that just creates issues, and they've added little features. And I've said it, I am a whole QuickBooks user, right? That is all that we base all of our accounting services on. But some of these increases are insane. It's becoming huge. And I'm encouraging my clients, 1, always take a look at what you're paying, but 2, let's build this into the budget. I think this is an arena where people just kind of forget that it exists, and all these softwares are quietly eating your take-home pay as a business.
100%. I think that's exactly where I was going to go with this is that I think you have to build this into your pricing, your pricing and your cost structure so that you maintain profitability. And that's something, we're literally looking at this right now. Me and Jenny, we were just talking about this, hey, I think we saw our costs go up a little bit over the last couple of years. I think it's time for another price increase because we have increased costs. So, it sounds like from the QuickBooks side, this is kind of dual reason. 1, inflation a little bit, okay? But 2, maybe we're trying to cover how much they've invested in AI. And to that point, I don't know that I've seen, I'll say I'm not in QuickBooks every day. I know your team helps us with the bookkeeping and everything. And so we're not in there day to day. I don't see the benefit of AI at all through QuickBooks. So when my costs go up as the business owner, like I'm just looking at it from the perspective of, even if I was in there doing some stuff, we're not that big. Like AI doesn't have that benefit on the smaller plans for a smaller business. Like if you're a few million or under, like I don't know what that big benefit is.
I would say even for the bigger companies, the benefit I don't think is there because it isn't foolproof. So like if you are a bigger company running many more transactions through there, that's even more opportunity for AI to make an absolute mess of your accounting. Yeah.
So does it take more time? I mean, I guess to that point, just thinking about it, does it take more time to double check the AI than to just categorize it right the first time? That's really the question. I think that kind of runs in that is at play here, right?
Yeah, absolutely. Like there's certain things that you definitely can train it and have it be foolproof. But when you think about, I guess, discretionary spending that could have been for many different things, right? Amazon is one that always comes into my mind for this. AI will never know what your intent was. Like you will still have to tell the system. So if it starts guessing to match, like maybe you invoice your customers the same amount and it applies customer A to customer Z's invoice because it's the same amount and AI doesn't know any better. Like you're just opening this like, I guess, spider's web of issues, right? So I don't think their enhancements have made things easier or faster or better. There's pieces, absolutely, but I think overall for the price increases that we're seeing, I personally just don't think it's worth it. Like I don't see it, and I'm in the software every single day.
Yeah. I mean, and to that point, I mean, I guess you still need that human for that analysis of making sure and that double check, making sure everything is right. And while we are harping on QuickBooks, I think many tech platforms, we're seeing their costs go up quite a bit. And so the larger question at play that I see, and we've alluded to this already, is like, so they all go up every year or they all go up every couple of years. How do we, I think the question many ask is, how do we plan for that? How do we make sure that we monitor that? And what are some things that you do with your clients in that realm to make sure that pricing is set right or that cost controls are in place so that those decisions are triggered?
So our first recommendation is an annual audit of your subscriptions. So like if you have not done this, log into your bank account today, pull a list and find where you're paying like monthly subscription costs. The other piece that I love to take our clients through each year is to actually look at the technology overhead and see the increase that's happened over the year. So in QuickBooks, like if you're using that platform, you can do a year over year look for your expenses. And I would say pull the last 5 even, and you can see a trend of how much it's been increasing. And if you aren't building that into your own price increases, you are automatically taking a loss out of your own like net profit, like instantly. You can guarantee it. So I like to say pull your last 5 years and see how much it's been increasing every year and count on that being the next year increase, like an average or what your last year even was. I think overall we see like a 10 to 15% average here with increases in technology. And it's not just like one platform, but it could be, maybe you've added another software tool and the ones you were using had their increases and it's come to like 10 or 15%.
So you're saying year over year recently, you've seen 15% price increases year over year. I mean, that's like 3 times, 4, sometimes 5 times inflation. That's crazy. I mean, and there's no alternatives. Like, here's the thing, like for many of the platforms we use, there are no alternatives. And even if there are, it's so difficult to want to change. Like I'm thinking about like my project management software. That runs our entire business. It is highly valuable to us, but is it so valuable that I'm willing to endure like, a doubling of my cost every 2 years, or every 3 years? The answer is no, because I don't think my clients would pay that price increase, on the other side. I don't know if there's the only solution that I see is pass it on to the customer.
Mhm.
I don't know if you see anything else on that realm. Like, how do small businesses address this outside of just that?
So we have a few clients that have found some pretty good all-in-one platforms for certain things. I know you guys have been using one that can do a lot of like your
Yeah,
calendar
true.
scheduling and
Yeah.
if you can find a way that makes sense. I know we have other episodes where we've talked about this. Like, does the changeover make sense, with time and effort and energy? But having the right systems in the first place. If you're not using something, get rid of it. I mean, that would be the second one with pulling the list for sure. But really outside of building in that buffer, knowing that the prices are going to be going up. And the hard thing is that every price is going up, right? So if you're a brick and mortar that has a place that you rent, your rent is going to be going up every year. And when you combine all of that together, I can imagine some of our listeners right now are saying like, are you telling me I have to double my prices every year? That can't happen. And totally hear it, right? Like, are your customers going to be able to, withstand that same increase? Probably not. But what are you doing inside of your business at the same time to enhance your value? And maybe it isn't old customers getting increased. Maybe it's an increase you're doing to new customers. You know what I mean? So like, there's pricing strategy easily, but you have to be aware that you need to be doing it. And this is like one of those silent arenas. Like, how many people right now are using QuickBooks, or like, who else did I see recently increase? I think one of the video, like I think Loom recently had a price increase. I think StreamYard did a price increase. I was going to say StreamYard,
a massive price increase. Like the plan, and it's the plan that we use because we record all of this stuff through StreamYard together. And the plan that I was on, or we were on, was like a $49 a month plan. And then out of nowhere, they were like, oh, the plan you're on is going to be like $349 a month. A month. And I'm just like, excuse me?
Yeah.
Like, that's insane. From 49 to like 300 some. I was just like, what? Well, you're using all of these. I'm like, no, I'm not. What are you talking about? I don't use these tools. I don't use any of those tools. So it was insane. Yes. We've been luckily grandfathered in. I don't know what's going to happen at the end of this grandfathering. Like, I'm evaluating these plans and other things to see what we need or don't need. But like, that's insane. And that to me is like, it's outpricing the small business market.
It is.
And that's what, and I get that there's more money in the enterprise market, but there are so many small businesses. They're the backbone of the whole economy. If we don't have the tools that we need to operate, like, the economy collapses. And I get that that's apocalyptic, and that's not where I'm going with this. It's just more like, we still need tools. Like, how do we make that happen? So it's
and honestly, I think, and I know we're going to talk about AI in this episode a little bit, but I do think this is where some softwares are losing touch with their users.
Yeah.
Like, they're implementing, and I know, and it isn't just Intuit or QuickBooks. Like, I know Asana has done this. I know Slack has done some things recently, and it's increasing prices, but they're adding these features that I think the users didn't come there for, nor do they need. And it's ruining the platform for its intention, because now they're saying, oh, we need to charge more because we've added all these features, but they're all features that you don't really necessarily want or need.
It's just AI-flation. It's, we're adding it in because it's the thing and everybody expects us to have it. Our investors do, or our stockholders expect us to have it, so that we can be seen as innovative and competitive. So we're going to put it in, and because we spent time and money on it and there's costs associated, we have to increase our pricing, but nobody's asked for it. So that's very interesting. Yeah.
So I know we talked about like pulling the statement and reviewing what you're actually using for software. So the second part kind of plays off what we were just talking about. And I would say, look at those subscriptions. Do they have a lower tier that still meets what you need? Can you change the subscription that you're in? Or is it maybe time that you look to see if there's going to be a different solution? I'm not saying move away from QuickBooks. So this would not be one that I would say, but I would say look at the tier that you're on. Many small businesses were put into like an advanced or plus for their trial, right? So like their initial, and then they've stayed there, and they're probably not using most of those features, and they could actually go back down to the base level subscriptions. Like Essential, I think is the base. So that would be my other tip for small business owners.
From a higher level and a viewpoint, because with the companies we see, there's like a benchmark of how much of your gross revenue one should or could be spending on platforms and services, et cetera. And I'm sure that's indicative or it's related to the industry that they're in. You know, for instance, like in the service industries for home services like cleaning, we tend to find like about 3% of your gross revenue goes towards software. And like that's a pretty good spot, actually, you know, and if even up to 5%, but beyond that, it starts to be a bit too much. But it makes sense in that industry for some of that technology because it runs their businesses. And so often I hear clients talk about this one platform, Jobber, that helps them, you know, schedule platforms, bill, communicate, run pay, you know, help with payroll and hours and schedule it, like all of it. It's so much stuff. Sure. And then they're like, oh, it went up from $90 to $150. It's getting too expensive. And I'm just like, what are you talking about? Like, put this in perspective of your gross revenue. You make $500,000 a year and you're complaining about $150 a month. Do the percentage. I think for some of this, now this isn't me defending some of these price increases because we've already said there's, I think, a flawed reason why some of these price increases are happening because of AI. Yeah. But when you look at, you know, your P&L or you look at your cost structure of everything, it's like there are certain pieces of technology we use that generate revenue. And so you almost think of that as like, this is my investment into creating this revenue. And if that multiple makes sense, or, you know, if we do it as a percentage of your profit and loss statement at 3 to 5%, you know, then you're doing wonderful. You're doing great. And so that's how I look at it for those industries. And I don't know, do you look at it in a similar way across your clients, or is there something flawed in my reasoning or my thoughts?
No, and I think software can be like a gray area because some companies so like to your point, find a software that maybe they do pay a little more than what, you know, standard may be, but it's saving them 5+ hours a month. Yeah. So like if it is something that you are saving time, or it is streamlining a process to save your team time, or maybe even replacing part of a job that somebody would be manually doing, I think it's a software totally worth it. Like, why would you not? If I'm paying $100 for a software and it's saving me 10 hours a month, that is a no-brainer to me, right? Like that would be one of those scenarios. So gauge what that software is actually doing or saving you, or where in your entire operational process or customer experience does it impact? Is it enough to make it worth the cost? And knowing it's going to continuously go up. Like every software you should assume is going to go up in price.
Well, I mean, it just costs a little bit every year. You should just expect, you know, 3 to 5% increase in cost every year. And that has to go, you know, down to your bottom line, 100%. I'm with you on that mindset. Like when I use that 3 to 5% benchmark, again, it's a benchmark. If you've got a tool that's 7% of your revenue, but look, it makes your life easy, done. Oh my God, less stress.
Yes.
Sign me up, you know?
Yes.
So great. Yeah. No, love that. But on the point, I think that's a great place to segue over. You know, we were talking about AI a bit. There's some new research that has been released by WARC that's revealing that 63% of brand visibility and conversational AI search overviews is being driven entirely by organic long-term brand building. So what do I mean by that? So when you do like a Google search, you know how they have like that summary now, the AI piece. So when your brand gets mentioned there, the reason it's there is because those brands that get mentioned have done all the right marketing things over time to build their brand. Okay. And it's that effort that is getting the biggest outcome, which I love hearing as a marketer, because it's just like, do the foundational stuff. Like, don't get distracted by the shiny things, by making awesome, compelling content that solves problems, that answers questions, that keeps you top of mind in a useful, relevant way to consumers is what gets you found just across everywhere, search and AI. So I loved reading this. I don't know if you took anything different away from this.
What I thought of reading this is like, don't ditch the proven things that have always worked. So like, you have people that make long form, you have people blogging, you have people like you have different arenas to be an expert in your area, like to showcase your expertise. And this is proving that those AI models pulling from those sources of expertise. So if you're chasing these new shiny objects of like, oh, AI can write these posts, or AI can, no, it's all generic. Like they are using your expertise in the way that like it's existed. So don't give up on that. And I think this leads to what you were telling me, what we were chatting before this episode about, AI and it not being used in the way that like it was thought it was going to be used. And like, what does this mean for long-term of AI? And so reading this article and then kind of like thinking about that in the back of my mind, don't give up on our methods that have been proven. Like, don't give up on all of those. Like, I think I asked you on an episode a while ago, like, does this mean blogs are dead, or like the blog postings are dead?
Right. Yeah.
This proves it's not. Like, this
Right.
proves that it's pulling from that expert data that you are putting out there. Maybe it is YouTube and, the written transcript from that or whatever it is, but like, you got to still have that type of content in
100%. Yeah. And last week we talked about how Google had, or maybe it was 2 weeks ago, we talked about Google was penalizing for really thin keyword stuff, which has always been like really like keyword stuffing is not a thing, but like using AI to just write really thin surface level content is not going to get you indexed. It's really about high value content. So yeah. So really, yeah. I just love seeing this because it just means, look, do the great foundational stuff first. Make sure you got a solid website that really talks about your services, answers the questions the customer needs answered, and then go beyond that into ancillary elements, and then if you want to do video or do other social, do that. But, you need to have that core content really dialed in and really valuable. And that's what's really going to get you cited. So yeah, love it.
So what you're saying, Dan, is branding is not dead, and it's more important than ever to have your brand identified, and that maybe the generic written web pages just aren't the way to go.
Yep. There you go. That's exactly it. 100%. Yep. But moving on to our next thing. I thought this was really interesting. This isn't really coming from a news article or anything like that. This is our experience online. We noticed something is going on Facebook. You asked me before we jumped on, hey, did you have a new Facebook layout? And I was like, no. Oh, well, all of my text is below the post. And so we just wanted to show everybody that, yeah, Facebook is doing some testing right now, and they always are. But you can see here, there's 2 screenshots of the same post. You're welcome, Ford Field and Live Nation, for this free plug. Happy to have a sponsor. But we've got Android on the left and iPhone on the right, and we can see clear differences between the 2 layouts. On the Android side, the main message is at the top above the photos. On the iPhone side, we've got the text below. Now, I'm not saying that this is on every iPhone, that the layout is going to be this way, but I think this is really interesting. I don't like it. It's where I'm at.
Horrible. So for anybody that cares, mine is the one with the text below it, and Facebook is now a horrible experience for me. I mean, like, I get lost. I get lost now. I'm like, oh wait, where does this go? Who does this belong to? What am I looking at? I don't like it. I do not like it.
You know what? Now, this makes sense based on recent changes and updates that have happened within Facebook, okay? Because I've talked about the Andromeda update on the advertising side. Basically, Facebook took their Lima AI or whatever the AI was called, and they applied it to ads to supercharge how it gets better outcomes. But it's all based on content diversity. and showing that content and creative to different people. And why I think this might be relevant here is because when we think about creative and content on Facebook, we're thinking about video and photos. We're not actually thinking about text. And so I see this and I think, oh, are they maybe saying that photos and the media is more important than the text? And I don't like it because of my habit. I want to read the post to understand what it's about. Because if I just see these photos, I'm like, okay, cool, glitz glam photo. Okay, great, scroll past. Because there's nothing in these photos that tells me what this is about.
Correct.
So if I see this, I'm now thinking, oh, I have to. It almost makes my job harder as a marketer or a small business owner. I see this and it's just like, oh, so if people aren't going to see my text first, I have to tell the story directly in the photograph that makes it compelling to my audience right away. I don't know if that means it should have text on it. Like there's so much testing to do here, Bridget, is what I see. And I just see thousands of hours of more work of how do I get to know this algorithm now, especially since I know it's going to show up in two different layouts.
Yeah. So like when I look at these two, I will say my eyes already see the pictures, like from the one on the left, like the Android.
Yeah.
Like I'm already visually seeing things like just because that you do, right? I would have missed what it was for. Like the one on the right, me being able to see that sentence that says, anyone else want to experience the R&B tour all over again? I knew those pictures now apply to that. And it's like, oh, okay. Like this was part of something that they brought.
Gives me context.
The one on the right, I saw the pictures and I would have scrolled right past the words. I would have never put the context to it ever.
Yeah. I think that's why I don't like it too, is that new version, I don't have the context of what I'm seeing. And the photos have to do that work for me. But there's like, for instance, in these, if I look at it, these initial images don't tell me anything about R&B tour. Like nothing screams that. So yeah, that's why I don't like it. But I do want to say your version matches Instagram more. Instagram is that format. The photo and media comes first with the text afterwards. So now that we're sitting here talking, I've made that connection. And I'm now wondering, is Facebook testing to see, do users on Facebook still engage in the same way if it looks like Instagram? I don't know what long-term could be, but yeah.
I think this proves the power of our brains because or just how we're conditioned, right? Facebook, I'm conditioned to know the words are coming first. Instagram, I'm conditioned to know that I have to scroll to look at the words to go with the photos. Where do I spend more time? I like the interface of Facebook better, to be honest. I like the words first. 100%. I really do.
Yeah.
But where other people love Instagram more. So I think it comes down to where are your ideal clients living and how do they operate on that system? I live in Facebook more than I live in any other platform. And it isn't even because I use it the most. It's just my most comfortable system. I've been on it the longest. So,
I mean, to that point though, I think that if Facebook is trying to make its platform more like Instagram, they're missing the forest for the trees. The reason we're on Facebook is because it's Facebook. We're not on Facebook because we want it to be more like Instagram. There is a uniqueness to the two platforms, and that is the value of the two platforms.
Well, and you're taking that away.
Right. That's exactly my point. Yes. Is that, there's a unique, and that's our unique selling propositions. Any business has it. And the more you try to be like your competitor or like somebody else rather than yourself and prove your value and uniqueness, the more you disappear because it's obvious you're trying to be something else. So yeah, I'm just going to put it here that this is don't go this way, Facebook. Just keep yourself, have your own identity and go down that route. So
I'm going to keep my poll going though. I'm going to see if I find anybody else's who has changed.
Yeah, you should see.
So far, I'm the only one in every arena I've talked in so far. So
interesting. You know what? I might just take the slide and put it on my feed and just be like, hey, has anybody seen a difference in Facebook like this? Yeah. Anyway, yeah. Cool. Moving on. This kind of flew under the radar for many, many people. Because if you're not paying attention to terms of services and how they change, you'd miss this real easily. But Google has altered their terms of service for their advertising platform, their Google Ads terms of service. basically removing a manual click to accept and instead just saying, hey, we're going to include AI and AI is going to run your creative and everything. So the new terms state that advertisers explicitly authorize Google and its affiliates, this is me quoting here, to serve ads, including through the use of automated program features to format, select, generate targets, ads, or destinations on the customer's behalf. So what? What does this mean? Well, if you're in Google Ads and you're using, say, one of their smart campaigns or one of their, what do they call them? Their advantage style campaigns like Performance Max or Demand Gen, those are heavily run by AI. And so what this means is Google now has permission to decide what headlines get shown, what descriptions get shown, maybe change up your images or generate new ones, video, decide where it's going to link on your website. It might, you might give it a link, but if you don't have the right setting checked, it might just start linking to your about page or terms of service, your own terms of service page, or like a quote page or a random other blog post because it thinks it's better for the search term that someone is searching. So basically Google is saying, let our AI make the decisions for you on ads, and it's just baked in. Now, again, as to what I said, it's been baked in on many of the campaign types. This is them really updating the terms to match what's already going on, but I can see it going a few steps further because they're explicit about it. It could go further.
I was going to say enhancing it further or letting it go further now because
yeah. I think the crazy thing through all of this is like through the terms of service, it still says that the advertiser is still responsible for all the outcomes. So if the AI generates something that breaks the law and you get sued, it's not Google's fault, it's yours. Or if you're like not in compliance, it's your fault that you didn't check enough times. So like all I read here is, oh, it's just more work for the advertiser. It's more work for the small business. We didn't ask for this, and here it is again. It's another bit of AI that we didn't ask for, really. We want better outcomes, but we don't want you to generate everything for us because you don't know us. Like that's been my thing with the AI content and stuff is the AI doesn't know the business. And here it is generating headlines and all these other things that are out of the blue sometimes. And yeah, anyway, so that's my...
It's like the QuickBooks AI, right? It doesn't know the business. It's just generating what it wants.
So let me just share.
What killed me about this, honestly, when you brought this up, the section in here about like you can opt out or restrict it, and I think the article that you pulled, that you're going to share it talks about this, but my mind was instantly like, this isn't my expertise. It's your expertise, but it's not mine. And so to a general business owner who might be trying to manage this on their own, it's just yet another place or another thing that they would have to know. And easy or not to do it doesn't matter. It's one more step to like, oh, great. I can't just like try to run ads. I have to now remember to turn all these things off so that it can't just AI generate things on my behalf and put all these URLs and direct people where I don't want them to be directed. And it's just a lot. It's a lot of
this,
AI to me.
This news is coming to us from Common Thread Collective. And we were going through some of the frequently asked questions that Google put out. It's like, can you opt out of AI generated ads? You can restrict the scope, but you can't fully opt out. But again, to your point, you got to go find them. And that's what I was going to share is like, so if you're a small business running your own ads and you have one of those demand gen, or even not, if you're running just a search campaign, go in and look at your AI settings and just make sure that they're at the correct level that you would like them at, and restrict them more if you'd like. I know that we have certain settings that we put in where we do allow the AI to do stuff, but we don't let it do like full URL expansion. And then we also don't let it do search term expansion within ad sets. So we've got these key pieces that we know we restrict it to, and we found some really good results with it. But that's because we've done the restriction. Without it, we've tested and it goes bonkers and we don't like it. So,
well, I think this also mentioned to look at your audience exclusions. So the AI piece can expand beyond the stated audience parameters unless you have certain exclusions active and correctly scoped, or if you have suppression lists that I think it mentioned, like it isn't even just changing headlines. Like you could end up paying to target audiences outside of what you wanted if you don't turn on the correct exclusions. So like it to me, it's a lot of changes or a lot of opportunity for the platform to have this AI kind of working in the background.
Yeah.
And I don't know, I guess I think about this with Facebook too. It probably has some sort of element where it's like, okay, let's get more eyes on it. Let's get more traffic. Let's get more whatever. But it may not be your ideal people looking at it. It's like the same philosophy of,
right.
Oh, I had 3,000 people view my video, but only 10 of them were really who I wanted to ever see it. You know what I mean? So it's like, AI doesn't, it can't actively know that all the time. And so like, even though you're getting more numbers, it's not anybody that's ever going to spend a penny with you, which I mean, again, it's one more place like, oh, and check
one
your
more
audience.
place. One more thing. Yep. No, it's just another thing you got to check, but make sure you check them. So if you're running your own ad account, go check them. If you're confused about where to go, reach out to us. I'll help you out. I'll point you in the right direction. I think that brings us over to our What the Biz moment of the week. There's been a theme that I have been hearing in our What the Biz moments of the week. They've all been pretty much focused on customer experience, to be honest. Like everything that we've shared here has been a customer experience. And I have one that is no different. I am on the neighborhood association and we are a nonprofit. We're going to open a new bank account. I think this is the second story I've shared with the bank. So there's something in the banking industry needs to get fixed hardcore. We went to a local credit union, to open an account. We were there for 3 hours and 10 minutes just to open an account. Okay. Like this shouldn't be longer than half an hour, in my opinion. This is insane. This is stupid. We were there for 3 hours. Now, I don't know if it's because we were a nonprofit. I don't think anything's changed in compliance, but maybe because they were a smaller credit union, they were trying to cross T's, dot I's, but like, holy cow, I'm there from 10 o'clock until 1:10. I was shocked. Now, they were wonderful people. I'm not going to blame the people. There's something about the system and how it worked. I don't know. But like, they had our EIN. They had our annual reports. We brought our meeting minutes. You know what I mean? Like, they could look up our organization on Lara, and find all of our annual reports and any other filings. They could have looked up our nonprofit status on the Pub 78 data, which is where all 501c3s get listed by the U.S. government that have that. And like, I don't know why, but it took 3 hours while we were there. It's almost like they did no prep in creating the new account before we arrived, even though they had all the information. Like when we were there, we had to fill out all this paperwork while we were there. I'm like, why didn't you send this to me ahead of time? Mm-hmm. Or why didn't you just fill it out? Like we gave you everything before. Like, so I don't know. There's something wrong about that whole thing. Why it took longer than an hour even boggles my mind. Because we were over at, I'll just say Fifth Third recently to open a different account for another business of mine. And that took us an hour and they had all the information. So I don't even want to know how long that would have been if they didn't have all our information. Mm-hmm. So I don't know, I don't know why it was different, et cetera, through it, but there's something wrong in this arena.
So obviously I deal with a lot of banks because we have to deal with banks with our clients. And I'm baffled by the banking industry. That's all I can say. So I actually worked at a bank while I was going to college. Things then were so much faster and streamlined. Like it never took that long to open accounts at that point, ever. Yeah. Never, ever. And I on one hand wonder if it's because they're trying to justify having bank locations and people in seats. So if you get, because most of the banks, and I don't know if this one, but I know recently for a lot of our clients, they can't even go open an account unless they have an appointment.
Well, and that's what I was going to share next. We had to set an appointment. Yeah. We walked in. We walked in 3 days ago and we're like, we'd like to open an account for our nonprofit. We only do that by appointment, sir. We can set one up for you. I'm like, do you want my money? What are we talking about? By appointment only? Since when?
Yeah.
Since when? Like that just I mean, oh, crazy. By appointment.
Yes.
So what it gets me wondering about is, what do all of their people do when we're not there if it's by
Right.
appointment only? What do you do all day that it has to be appointment only? The two things that I think about are they're all understaffed. So banks have locations to show strength because it's a real estate game and real estate appreciates traditionally. And so it shows strength that you have these branches, but they're all understaffed. That's one thing I think might be at play here, that they invest in real estate all over because it's safe for their, their own money, et cetera, and everything. And they're all slightly understaffed. So you have to get an appointment so someone from a different branch can come over to this branch locally and do what it has to do. So that in my play is one idea.
Could be.
I don't know what the other idea is, but that kind of hits me as like, that might be why, but it's wrong. It's all wrong. It's all wrong. Somebody walks in to open an account, that teller should be like, here's our initial paperwork. You can do this, fill this out, and then we can get you started. Or if you'd like, you can start online and like give you a tablet or they have something for you. And then there's someone that takes you back to finalize the last pieces. Like there's no reason it needs to take 3 hours or that you have to come back 4 days later. Like that's insane. It's absolutely insane. Just shut up and take my money. So if you have a great idea on how to improve the banking industry and make it better, hit us up at whatthebiz.com. But I think that's where we're going to wrap up today's episode of What the Biz. Thanks so much for hanging out. We know your time is valuable. Let us know in a review, whether it be Spotify, Apple Podcasts, or hell, if you're listening on YouTube, just leave a comment down below and subscribe there as well. If you want us to cover a topic in the future, check out whatthebiz.com. Drop us a line. We love hearing your ideas. But until next time, keep building, stay proactive, and we'll see you on the next one.